What is dollar cost averaging? How can it help you as an investor? And how do you calculate it? Dollar cost averaging is a simple investment strategy that calls for investing the same amount of money on a consistent basis. But is that really doing you any good? Let's find out. All right, before we get started, remember to give me that like, hit subscribe if you haven't already. Let's help my algorithm for Google. All right, so we all know one of the biggest problems that investors face is they can't control their emotions. They are always buying high and selling low, when we all know it should be the opposite way around. You sell high and you buy low. The only problem is we're emotional creatures and we will act on feelings and irrational decisions. What dollar cost averaging does is you are constantly buying into the market a certain amount of money every single, whether it be week or month or quarter, where you don't care what the market is doing. It lets you keep your emotions in check, and you're not going to worry about if the market is up or down the next day, because you will be buying regardless of what the market is doing. So where's the benefit come into play? Well, it's simple math. If you just think of it, one of the biggest benefits is you're buying more shares when the prices are low and fewer shares when the prices are high over a period of time. So let's think of that really quick. Let's pretend you have a random index that you're investing in and it costs $100 right now. You have $500 that you put into it. You're buying 5 shares. A month later, let's say that index plummets down to $50. You're still going to put in $500, but now you can afford 10 shares. You're buying it at a lower price now. You can afford more shares. Another month goes by and it jumps all the way up to $250. You're going to put in another $500, but now you can only afford 2 shares. So if we look at the total, you have bought 17 shares worth of this index for a dollar cost average of $88.23, even though the stock is now $250. That's dollar cost averaging in a nutshell. And what's great about dollar cost averaging is anyone could do it. People think if you want to buy into the market, it's only for rich people. You need to have a lot of money set aside. But that example shows you that, no, you really don't. You could have maybe a couple of $100 that you were putting into the market every month. That's easy, that's affordable for most people. And let's show a real life example. Let's say that you are investing $500 a month every single month, and we'll go back in time to how about right before the housing market crash. So you're starting off buying at a high and the market's going to crash, but you're going to continue to put in as the price gets lower and lower, and then once the price finally gets better and better, you're still going into the market. And let's see what that would look like over that period of time. All right, what you can see is I have a spreadsheet on Google Sheets, and we're going to be tracking the SPY. That's the Standard & Poor's Index. It's an ETF. Right now it's trading at $286. But if we rewind back to the top of the housing market crash, the top was in October of 2007. The price was $155. You invest your first $500, you're able to buy roughly 3 shares. And then as you can see, a month goes by, we're in November, price went down a little, we're still buying 3 shares. But if we go down, you could start to see when the price got a little lower, $135 per share, with that $500 you're investing every month, you can now afford 4 shares. Keep on going down, you can now see you could buy 6 shares once you reach December 2008. And you can see 6 shares, 6 shares, 6 shares, 7 shares in 2009. And then I put in every single price for every single week all the way to May 4th. And off to the side, you can see our contributions, which was a total of $82,500. We now own 511 shares. The market value, our portfolio's value, is now worth $146,000. Our average cost per share came to $161. And like I said before, the current share price is $286. That's how dollar cost averaging works. If we jump over to TradingView really quick, just so people who like to look at charts to put this into a different perspective, this pink line, that's $161.47. That's technically the average price of all of our shares. All 511 shares is at that pink line. And of course, we're all the way up here. When was the SPY worth $161? If we scroll all the way back, you could see back in 2013 was the last time the price was that low. I personally would love to have over 500 shares of the SPY at a price of $161. This is how dollar cost averaging works. It is for anyone. It's a great strategy because you're not mixing your emotions with your investing. You are just putting into the market every single month after month, and you're never selling. You don't care if the market is going down, because if it is, you could buy more shares now for that set price. And when the market is very high, you're buying less shares for that set price. And for those of you who are wondering how you can calculate the dollar cost average, most brokerage accounts nowadays will have what your average share is. So say if you buy SPY today and it's $286, and then say you buy another share in a month and whatever price it is, it will figure out what that average price is for you. But if you want to know how I do it on Excel or on Google Sheets, there are some formulas that I plugged in that helped me pull the stock. As you can see right here, it's Google Finance, the sell plus the price plus the start date, and I wanted to do a weekly interval. And then for our dollar cost averaging results over here, you could see I just took the sum of all of the contributions. I took the market value, which was just the price times the amount of shares that we have. And then for the average cost per share, all I did was take the contributions and divide it by the shares. If you found this video helpful and you enjoyed it, give me that thumbs up. You can add a comment if you want. If you have any further questions, or if you want to see any other type of videos, let me know. And as always, I'll see you in the next one.